Monday morning, folks, and welcome to a brand new episode of the Finmet Mondays podcast. Ronan, a very warm welcome to you once again. We're meeting after 2 weeks. Gold surprisingly had a little bit of a dull spell. It corrected heavily from 3,400 levels last week. We saw it rally up to 3,400 at the start of the week, but then soon after on Wednesday, it just started to pull off. We've been talking about gold's bullish sentiment from a long term, but it's just not been carrying through in this past few weeks that we've been seeing. So, what is your take on what's stopping gold from really creating these new all-time highs?
Gold started strongly and went above 3,400, but now ended the week last Friday at 3,338, I think. So it's like gold has underlying strength, fundamental strength, but there are forces that are keeping it from going above to a new all-time high. There are just no catalysts. But on the flip side, there's a huge risk-on sentiment that has developed in the last few days. And when you look at equity markets like the S&P and Nasdaq in the States and the FTSE in London have all reached new all-time highs. So there's a euphoria out there still. And I think markets in general are discounting the uncertainties in the environment, the geopolitical and the global uncertainties. And they're looking for any shred of evidence that it's risk on, and they're going with that, which always subdues the gold price because as people see it as less of a safe haven or less of a need to have a safe haven, then they will the institutional investors will flip like a 1-0 binary, either risk on or risk off. So that is really preventing gold hitting a new all-time high. There's also the Fed, the US Fed has been really playing this management of expectations card by saying wait and see attitude. They've been stringing along the markets, and there's a meeting of the Fed FOMC next this coming week. And I think they're going to be again trying to make the markets stay in a wait and see attitude. And at the end of August is the Federal Reserve Jackson Hole annual symposium where all the economists meet and they talk about macro big picture issues. They don't really talk about interest rate decisions as such, but the media and the markets are always looking for any shred of evidence about what might happen. And there might be a September rate cut, or maybe it'll be a little bit later. But that also is that wait and see momentum is preventing gold going to a new all-time high. And we can see also with silver, started the week strongly and then went down below 38. It looked like it might go from 39 up to 40, which would be, again, uncharted territory for the last 14 years, but it just didn't have that strength to do so.
Understood. Understood. Separately, Ronan, on the domestic front, I think about 2 to 3 weeks back, there was a proposal from Sebi for for suggesting that Indian gold ETFs should be priced in according to MCX prices and not according to LBMA prices. This is so that it can better reflect the consumer sentiment in India. Could you give us some little bit more details about this proposal? What was SEBI trying to kind of introduce, and what does it have potentially as an impact on the local domestic market?
Yeah, I think it's actually an underrated development. It has got some media coverage, but it hasn't got a lot. It has a lot of potential to change, to help change global pricing of gold. So basically, SEBI came out with a proposal. SEBI is the Securities and Exchange Board of India, the regulator for the domestic securities markets. And SEBI said that it was proposing that Indian-based exchange-traded funds that have precious metals products like gold-backed ETFs, silver-backed ETFs, would in future price their valuations of the fund off of local Indian prices and not the international LBMA price. So currently, they would take in the LBMA price at the end of their trading day and value the fund based on that, and people would deal based on those prices. But they're now saying it's more. They want it for a lot of reasons. They want Indian gold pricing to be more part of the global price discovery mechanism, but they also want that Indian gold-backed ETFs and silver-backed ETFs reflect domestic supply and demand and sentiment, and even the distortion of import duties and so forth. So if that happens, it will really give more pricing power to things like MCX, because they said that they want local price sources, but the biggest local price source is the MCX prices, the future trading. So if that happens, it will go a little bit towards giving India more power in global price discovery. And I think it's a very interesting development, which is worth watching over the next 5, 6 months.
Thanks a lot, Ronan. These were very insightful points that you brought out. Let's look at how the markets play out this week. But till then, thank you so much and goodbye.